Good evening, Arlington, and welcome to this evening's edition of VoiceBox. Tonight, our question focuses on how we can all financially reinvent ourselves in these economic times. And even more importantly, what financial habits can we establish to serve our entire family no matter what the times? How can we be smarter consumers? How can we get the young people in our families involved in the financial conversation? And how do you as a parent learn to say no to your kids? These questions and more will guide our conversation tonight. And as usual, you all are welcome to join the discussion by sending us an email at voicebox@arlingtonmedia.org. Now let me introduce our guest tonight. We are joined by a bunch of experts who collectively bring much experience in these matters to our conversation. I'm joined by Patty Brown, who is the Community Relations Manager at the Arlington Community Federal Credit Union. Yes. Welcome, Patty.
Thank you.
We also have Lisa Moore, who is an instructor of finance, banking, and investment at the Arlington Career Center.
Thank you.
And we also have VoiceBox own Renee Green, who is the host and producer of Money Concepts for Life and is also a financial consultant. Welcome, all of you. Our conversation tonight takes place amid the backdrop of national economics, and officially the Great Recession is over, but that might be met with some cynicism by Arlington families who are struggling with high unemployment. They are coping with stagnating wages. They may be dealing with underwater mortgages and diminished access to credit. And all of these circumstances, many project, are really a part of our new normal, the way things are going to be moving forward. And if that is so, how can people be effective stewards of their own financial future? That's what we're going to talk about tonight. And Renee, I want to start off with you, because, you know, it used to be the rules of finance were pretty simple. Don't spend any more than you actually make. I remember when I was a kid, the only way you could get something if you didn't have money to buy it today was to put it on layaway, which may be an alien concept to people, where you pay something weekly and then when you've paid it off, you can take it home. Very much unlike today's world. So what should be the new rules that guide our financial?
And you know, the horrible thing is that we have to look at budgeting. And one of the things with budgeting now, and it's so helpful, is to actually have the whole family involved in the budgeting process, because you can't just be able to have one or two people in the family. You have to have the whole family involved. That way you're all on board with what's going on. And some of the things that you need to be looking at is specifically, where are you spending the money?
Knowing where it's going out. Where
it's going out, exactly. And I mean, there's a lot of things that you can be doing when we're looking at budgeting, and it doesn't have to be that dirty word anymore. But it's just, you know, double checking what you're doing. And one of the good ways about doing it is to write down, what are your expenses? You know, what are your monthly expenses? And look at ways to, like, good things that you can be doing is go back to the old-fashioned way of actually cooking your meals. I know so often that we're all living in such a fast pace, and you know, both parents are working, and you're working 12 hours a day, and you're taking the kids here and you're taking the kids there. But stop and go to the grocery store. Take a list with you when you go to the store with your coupons. Go back to the old coupons and cook all your meals. Okay, if you can, maybe go out to dinner 1 or 2 times a week.
I'll say, okay, for you, a lot of what we should do with this new reality is really go back to some of the old ways that life kind of existed. What about you, Patty and Lisa? What are the sort of new rules that ought to guide people?
Well, I think it's lifestyle changes or expectations of what your lifestyle should be. And I think people were living up to whatever they were bringing in, instead of living down sort of lower than what they had so that they could save more. Every penny you had coming in, you were spending it, and even the pennies that you didn't have, you could get credit, so you were still spending it. So I think a lot of the expectations that people have of their lifestyle just need to have a reality check. Don't go to Starbucks every day. We all like those pumpkin lattes this time of year, but you can't really afford to do that. You shouldn't really be doing that. Maybe do it as a treat, but it certainly shouldn't be a habit of doing it every day, because even if you are employed, you still need to be putting away as much in savings as you possibly can, because the new normal now is that you should have more readily available to you should something happen to your job. So you really need to have more in accessible savings at this time.
Okay. Budgeting, saving. Alien concepts may be for many people out there today, but really, life did exist in that way at some point in America. Lisa, I want to ask you, since you do work with students, you work with young people, and often, right up there perhaps with religion and sex and politics, money is one of those things that people have an awfully difficult time talking about. They either find it too hard or too impolite, and that even extends to the home, where people don't really talk about those things with their children. Give us a sense of the financial literacy that young people who are coming to your classes and your program kind of have.
Well, I think a lot of the kids today, they are used to kind of the old ways of, having a credit card or, even getting allowances. Some of that has even stopped. And so a lot of the students that I see in my class, they just really want to know, because they probably hear stuff on the news. They probably hear their parents maybe talking about bills and finances. And so they have that yearn to know what's going on, what is it, what is a credit report? And so they come with a lot of questions, they come with a lot of questions. What exactly is a credit score? What does Wall Street have to do with that? So they have, these ideas, but it hasn't really sunk into them.
Gotcha.
And so they're a little confused. And so those are some of the questions that I get in my classroom. Most of them are high school students. The ones that do have part-time jobs, I get a lot of the questions from them, because they have the jobs, they get the paychecks, and they want to make sure that they're spending their money wisely as well. A lot of them may all have cell phones, so they have bills themselves. And so I think it really kind of hits home when they realize that they have to be able to budget their money to be able to pay for some of the fun things that they have as well.
Okay. And, as I think back to, why we're really even having this conversation, it's with the context of a great recession. And as part of that, we had a collapse of the financial industry, and from it, reforms to the financial sector, as large as it is, but that affected, banks in many ways. Credit unions a little bit different than banks, even though you provide a lot of the same services. Patty, this is a chance really for you to sort of make the case for the Arlington viewer as to why credit unions in particular, and ACFCU in specific, is a good place to do their banking business.
Yes. Well, credit unions are just basically very different than banks. First of all, we're not-for-profit financial institutions, and we get a tax break because of that. And we pass along that tax break to our members in terms of they get lower rates on loans, they get higher rates on savings accounts. We aren't taxed like banks are taxed, because banks are for profit, and which is fine. You need both of those things in the economy. We're also member-owned. So when somebody comes in to open an account at the credit union, they're not just a customer, they actually are an owner. And so they get a high level of service. We're very responsive. I mean, you can imagine if you had worked in a business and the owner came in, you would give them extra attention. You want to be very prompt getting back to them on issues that they have. And you really want to go along with them and help them through all the stages of their financial life. As they come into the credit union, they come in young, maybe in high school as students, and then they go, they're getting their first car, they're getting their first credit card, then they start to have a family and need a house, those sorts of things. So you really develop a relationship with your members, and they rely on us as sort of an unbiased. They come to us to find out information, like the students do a lot with Mrs. Moore in her class. They really want to understand situations, because they might not have all their services with us. They may have gotten into a subprime mortgage, or they may have gotten into some kind of a bad loan that they're having issues with now. And so they really kind of look to us as, we're going to tell them the real deal. We're going to work with them as best we can. We're going to take the time. We're small enough that we can take the time to work with our members and really help them through the bad times. And of course, we also help them through the good times too, to reach the goals that they have, the financial goals.
Well, it's all very, very intriguing, especially the contrast with banks in terms of membership versus pure customers.
Exactly.
And I'm just curious, have you found during a time of great turmoil, whether it be consolidation in the banking industry or lots of banks being in the news for not so good reasons, has that drawn an increase of attention to credit unions?
I think it has, because you went with a bank for a particular reason. That bank's taken over by another bank. Then that bank's taken over by another bank. Pretty soon, it's not the bank that you went with. And of course, the fees are always changing too. And that's how they survive and make profits. But, not all checking accounts are created equally. And so when you're looking at certain minimums that are required for checking accounts with service fees, and even if you go into the lobby, in some instances, you are dinged with a service fee. So I think that people are, maybe the bank that they signed up for originally is not the same place that they're doing business now, and they're dissatisfied, or they can't get answers. They can't get straight answers, or they find it's a hassle to deal with the people there, or they don't get back to them. So I think they are looking for options, and I think that it's been an opportunity for a lot of pundits to talk about credit unions out there, because I think we were sort of the quiet company for a while. A lot of people didn't know about us, and we do have limited membership because not everybody has access to a credit union. So I think it's been good for us in that, people know, I think if they go to a credit union, they can expect to have lower rates and lower fees, and that they can get some financial education with the products that they're getting too. And that's what we want to make sure, that people understand what they're signing up for and that they know how it works.
Okay. Well, you all have been involved in finance and banking and education for a long time collectively. And I'm sure you've seen maybe perhaps a lot of mistakes repeated over and over again. Give us a sense of what the common mistakes or just minor errors that people make when it comes to managing their finances that you've kind of seen over the years. Back to you, Renee, to start.
Well, one mistake that I've noticed is that people don't really go into research as much as they really should. For example, when you're looking for a financial advisor or a financial planner, you want to do a little bit more research on the person that you're going to be doing business with. And I feel as though a lot of people make that mistake that they just blindly trust people. And you really shouldn't. You really need to do your homework and check into things. When you're hiring like a financial planner or advisor, you actually want to look at someone who actually has the licenses that they say that they do have, whether it be a Series 6 or a 7, 63, and 65.
And what is that licensure, what does that tell you? What does that tell you as a consumer?
That tells you that they've actually gone ahead and they have passed exams with the National Association of Security Dealers. One of the other things that some people, advisors, when you go, and everyone's saying that they're a financial advisor right now, whether you go to your bank or a CPA or attorney, your friends, people on the news, they're all saying that they're financial planners and advisors, whereas they don't necessarily have all the education and the experience that you really should have. When you say kind of like that. And, when they're looking for a planner, I would say that you would really want someone who has some experience, maybe at least 10 years of experience. And people forget to ask, and and ask for a bio. And a bio actually will tell you how long a person has been in business and has been giving advice or planning and working in a bank or an institution.
Maybe it's part of that check references too, right?
Exactly, and check references, and people forget to check references, or they don't actually go onto a website. You can actually go to FINRA, which is a federal agency where you can actually check a broker's record and make sure that they're licensed in the state to do business, and also that they don't have any records against them. Mm-hmm. Or if they do have any records against them, has it been resolved, or was it just a dispute that was unjustified? And all that's right on finra.org that you can look at. So I think a lot of people make mistakes that way. I know that just, I'm a consultant, so I know that about a month and a half ago, I had someone that called me, and they were complaining about their financial advisor and their financial planner. And come to find out that this person wasn't even registered. Mm. And they had been doing business with them for years. And this is a very smart and very educated person. I was very surprised to hear that they had been doing business, and then they were complaining about this broker had been with 3 different companies. So had been with one company that had downsized, and then they went to another one, and they kept changing their accounts and their records. Right. Mm-hmm. So when they kept on changing their accounts and their records, they kept on charging the client.
Right.
And then they kept on making trades for the client and charging the client.
So fees on top of fees.
Fees and charges and what they call is churning on accounts, mm-hmm. and different things like that. Just totally improper investments. So they had contacted me, and I looked on FINRA, and the person wasn't even registered on FINRA. So that was kind of a questionable for me. I said, oh no. And then I Googled the person. Yeah. So it's always best now when you're doing business with anyone, whether it's investments or whatever the case may be, Google the people and find out, a little bit more information. So you need to do your research, and people just are not doing the research that they need to be doing. And this individual, of course, had lost money. Sure. Lost them, investment advice, and so we were able to correct that. But they really need to be doing a little bit more homework.
A little bit more homework. What about for the for the people who maybe don't have money that they can think about using for investments and would require the use of a financial planner? What are some of the other mistakes the people are making? Maybe it's starting off with students themselves.
Yeah, I think a lot of times with students, because again, they kind of think of credit cards, and I've seen a lot has changed. I remember when I first started teaching, a lot of students, when I would do a unit on credit card, a lot of students would bring in the credit card advertisements that they would get in the mail. Many of them, half the class, turning 18 before they would end up leaving my class. And so they would come in with the credit card statements, not really understanding what they were really looking at. Mm-hmm. And so we would kind of go through the statement and read the fine print and understand what APR is and understand what it means if you're going to be late. And so maybe the advertised rate of 4.99 really doesn't end up being that way. So I think that's something that the students can really relate to, because they all want to get a credit card. Mm-hmm. And so when they start to look at that, I don't see that as much anymore when we start to look at credit cards. Right. Yeah. A lot of that has changed now. But yeah, at one time, the students, as soon as they turned 18, they were getting their first credit card. Promoting it to kids on college campuses. And so I'm glad to see that a lot of that has changed, because I think the credit card debt has been a big, big issue for our young people.
Now, Patty, I heard you sort of alluding to there's been some reform nationally, which has caused companies to change the way they do business with credit cards and the information they present to consumers, and the things that they can do if consumers don't read the fine print.
Right.
sort of how much of that applies to the credit union world? And
well, we still have the same compliance rules
mm-hmm.
as everyone else, and most of it is soliciting younger people under 21.
Mm-hmm.
You're not able to do that anymore, and they have to have a stream of income. Anybody that takes a loan out should have a stream of income anyway. But we never did a lot of the direct mail, that sort of thing. Credit unions typically don't get into that sort of thing in terms of targeting young people. But it really amazes me, and I think with Renee saying that, you know, people don't kind of look at their own situation. They don't examine it as closely as they should. I'm just amazed at how many people have no idea what their rate is on their auto loan. They know what their payment is, but they have no idea what the rate is. They don't know what the rate is on maybe a couple of their credit cards. They just don't know. They know what their payment is. They know what their minimum payment is. And so in order to be a really good consumer and try to save more money, you need to know what those rates are, because your goal is to get them as low as possible so that you're not paying all that additional interest and you can save more. But I'm really surprised usually when I do a seminar or something, I say, how do you all know what the rate is on your credit card or your auto loan? And they're just like, no, I know what my payment is, but that's all I know. Yeah. So I think that now, especially with the economy the way it is, that we're all looking for small ways that we can save more. And one of them is refinancing something at a lower rate and getting that rate down so you have more money in your pocket.
You know, so a lot of people who listen to, you know, stories of people who go through financial difficulties are kind of pointing to things that you all are really kind of alluding to, that individuals are not doing their homework and not performing their due diligence. And as a way of absolving other entities for, you know, for helping get people in that mess. And I'm just curious as to what you all think. Where's the burden of responsibility when it comes to consumers versus credit card companies or versus mortgage lenders or versus any other entity? Who's really at blame, and more importantly, who should be held to account?
Well, I think the individual really needs to be accountable for their own finances, but it's going back to being retrained and re-looking at that, because we're in a different world right now. But just like you were saying earlier, people don't look at so many of their expenses where they should. Right now is an opportunity for people to look at all your loans. Look at the interest rates. If you can go and refinance your mortgage, the rates are so low right now, or look at some of those other loans. Look at ways that you can save money. And then look at right down to your utilities. I know a lot of people are like looking at their cell phones, looking at ways to reduce the expenses of their cell phones. Some of them aren't having a home phone anymore, looking at ways to reduce your cable bill. There's some people that are saying, you know what, the heck with the cable bill. I'm not going to have cable. I'm not going to have my home phone. I'm just going to keep my cell phone. People are looking at all different ways that they can save money. But another thing, not just looking at the loans, but looking at things like your policies, like your insurance policies, looking at your, not just your health, but your disability, what you have at work, or your life insurances. Are they the correct type? Are they the correct amounts? Can you lower them? What can you do? So you want to look at insurances too. Home, auto, go ahead and compare and go call a couple people. Try and do 3. I know that I saved a family just $1,600 last week. And I mean, when you save someone, you know, $1,000 or, you know, $1,500 just on auto insurance, that gives them another $100 in their pocket to go to something else. And it's unfortunate, but we know expenses are going up right now. I mean, you know, what you spend at the grocery store just keeps on going up and
gas
up.
Has gone up a little bit too.
Yeah.
Local filling up the car. So
That's right.
you know, that's something that goes up and down. But But I do think there has been a lot of predatory lending out there, and that's, obviously the reason for all the reforms going on. Very aggressive and imaginary types of loans that were really not based on sound principles. And people have dreams, and if they see something like getting into a home, it's a dream that they have, even though they're like, I just never thought that I would be able to do this. It's too good to be true. Well, it was too good to be true. And so I think that there was a lot of smoke and mirrors on the other side where people were enticed into things that they really wanted, and they didn't understand what they were signing up for. They didn't ask someone because maybe they were like, well, it is what, I think it is, or what I want it to be. And so they got into something that was a very bad product for them, and they're paying the price. Well, we're all paying the price for that now, too.
Right.
But, it's on both sides. I mean, I think that, fortunately, Lisa has a class. I wish that everybody had to take that class so that they do examine things a little bit more closely. If you don't understand something, don't sign it. And she, just by going through a loan, even a loan application, even a credit card, all of the disclosure information on a credit card, you should know what you're getting into before you commit to it.
I know that I do the Money Concepts for Life, which is a financial education program to help people have a better understanding of financial concepts and strategies. One of the first programs that we actually did was what's called as Anatomy of a Real Estate Transaction, Part 1 and Part 2, because it was so complicated.
Sure.
And it was actually a program that I did with my brother, who wrote a small book exactly telling you step by step what to look for when you buy a house and all the hidden fees and expenses that go along with that. It's unbelievable. We used me as an example, and so many times on my program I use examples of myself and the mistakes that I've made.
Sure.
Which is and I have 30 years of experience financially, so you can see that even someone who has the knowledge and makes mistakes, and I even made mistakes when I purchased my home, so I disclosed that right on the programs. And I mean, anyone can look at those and download the program, the programs that we've talked about, and it's full of a lot of helpful hints and information on transaction when you go to settle on a house, and how complicated it really is complicated.
And I want to hang on that point, Renee, because a lot of finance is complicated. Once you get beyond basic budgeting and income versus expenses, some of the other ways that money can work and is impacted in society is not for the faint of heart, so it does require a little savviness, a little experience, and I want to go back to students for a little bit, who, in addition to navigating a world that can be complicated, also have the added pressure of having, friends who may have different economic circumstances, who want them to hang out at Starbucks and buy the lattes and go to the concerts, and money pressures are also part of the pressure of growing up.
Right.
And I'm just curious how you get these very common sense and clear lessons to get through when students have so many other things that are maybe also putting pressure on them.
What we do at the Career Center for the past couple of years, we've participated in an activity called the Reality Store. And what the reality store is, the students are given a life scenario. They're married, they have so many children, and this is their income. And the students are broken up into groups, and they go to different stations. And so one of the stations might be the mortgage or the rent, another station might be the car payment, housing, medical bills. And so they go around and they actually basically see what their parents are going through and basically having to budget for the month. Working with the income that they have in their life scenario, you get a lot of stories that come out of it, like, I don't want to have children, or my wife has to work, or something like that. So I think the kids really, when we did that activity the very first year, the kids really walked away with, wow, is this really what my parents have to budget and manage each month? And we got one letter from actually a parent who was like, she was so thankful that her student, that her child had actually went through it. And, you know, we said that a lot of adults probably said that they wish they had personal finance classes. And again, I get parents that say, wow, I wish I had a class like this when I was in high school. So I think the more we can arm the students with as much information, I think as well with parents, whereas before, you know, parents probably didn't talk about the finances. So I think getting the kids involved in it, I have 2 boys myself, and so, you know, Christmas time is coming up. And so, of course, you know, they want to open up the Walmart magazine and just pick out the toys. But getting them to understand where the money comes from and how to make the money and what they're going to do with that money in that short period of time. With my 6-year-old, he knows he gets an allowance. And he was like, well, what can I buy with $6, Mommy? And so, you know, I think it starts early. It starts as young as preschool. And so I think that's a big thing that parents can do to help get their kids started off on the right track.
Agreed.
Yeah. Well, you know, and back to sort of the complication factor, you know, I recall when I bought my first house, the settlement process involved reams and reams of paper, and it felt like it took 3 hours to get through signing each document. And I remember at that time thinking, we're really not spending as much time on this as we should, given the amount of paper that I have in front of me. But it was still a 3-hour process. Bought my second home a few years later. Same amount of paper, took about 30 minutes. And I was pretty much shocked that, you know, this very large transactional process was treated so rather cavalierly in terms of making sure, you know, all parties understood what was going on. And the question becomes, you know, Patty, a lot of this has to do with efficiency. I mean, you know, we're you know, moving financial products and making things happen is a way to facilitate economic growth and economic activity. So how do we balance the need for speed versus the need that you say credit unions have to make sure their members are informed and educated about the processes they're involved with?
Well, I think it's, of course, as the consumer, you also need to ask the questions too. You can't expect that people are going to just open up and start explaining everything to you if they assume that you understand it. So we all have to sort of take it on ourselves if we are unclear about something. What is the interest rate? I mean, you might be able to see what the monthly payment is, but what is the amount of interest I'm going to pay over the whole life of the loan? That type of thing, so that you know what it is and what the terms are. Are there prepayment? If I pay this off early, is there a penalty for me to do that? So there has to be some, I think, some questions on the part of the consumer too, the member at the credit union, of kind of probing with appropriate questions, because you may not understand everything. And of course, sometimes people do understand more than you realize they do. And of course, we want to get those transactions in and out quickly for our members because everybody's busy and a lot of things can be done through the internet. Paperwork can be supplied to them so that all we need is a signature or something like that. But I think that more and more we have to make it more incumbent on ourselves to ask some questions if we don't understand something, and maybe just say, you know what, I'm going to take a minute to read over this, even if you don't really understand every bit of the language on it. But just take a minute to read it. And if there's some big red flag that comes out at you, you know, ask a question about it. Or if there's some term that you don't understand on there. I know that before the Credit Card Act came out, there was a universal default clause on the credit cards. And people didn't know what that meant, but they didn't ask. And so what it meant for them was if they were late on a cable bill, if they were late on any other bill, then that credit card bill was also going to go up, even though they weren't late on their credit card. So I think that if there are terms that you don't understand when you're reading through it, and I think that if you are signing something, especially if it's a big thing like a mortgage or buying a car or even a credit card, you do need to read over it and see if there's anything in there that jumps out at you that you need more clarification on.
I think that it's amazing that buying a house is one of the biggest financial investments that you do. And you usually only do it maybe 2 or 3 times in your life.
Right.
Mm-hmm. But the professionals that are actually helping you with it might do about 5 or 10 of them a day.
Oh, yeah.
Right.
You know, and you have to really trust these professionals. However, it comes back to the thought about that you should learn this in school.
Yep.
Mm-hmm. Because as a professional, they don't have the time to go through everything in detail about the mortgage process or about any loan process, really.
Right. Mm-hmm.
But it goes back to the fact that, you know, either you take it upon yourself to learn, do your own research, download information off the internet, look at videos, do whatever, and hope that your children go through a program like you're offering, or that the schools should have some type of a program to teach people. And if they don't, teach adults too. Why not? You know,
Mm-hmm.
there should be more out there and more information for people and accessible. Because I guarantee, even though you've done the process twice, I bet you if I was to look at your paperwork, I would find 2 to 3 places where you were ripped off.
Oh, sure. I mean, in hundreds of pages of documents, if you could only find 2 or 3, you'd be doing well.
Exactly.
Yeah.
And I know for a fact a lot of times, even with like the title insurance, a lot of people don't get the actual physical title insurance or the binders that they're supposed to get on their mortgages. And that could cost you maybe even $1,000, $1,500, $2,000, and you're not really even getting all the information and everything that you need to, and it's still a charge to you on your mortgage.
You know, let me ask you. You know, going back to sort of the way things, were, and this is pure speculation on my part. I'm interested to hear what you all think. But there was a time when, talking about homes, for example, your bank or your credit union would, underwrite your loan. They would hold your loan. Mm-hmm. Therefore, they had skin in the game, so to speak, and were really encouraged to make sure that you were a credit-worthy person who was undertaking an obligation that you could well fulfill. Mm-hmm. Well, that's kind of changed these days. Mm-hmm. Loans are securitized, they're bundled together, they're sold to investors, and originating a loan is never, it's not the same. The people who originate are not the people who hold it, not the people who ultimately have the interest in seeing it repaid. How has that sort of changed this world? Because it used to be that, it's not that Americans got less smart all of a sudden. It's a little bit that, well, some of what they could take for granted has now changed. They can't assume that the person originating the loan has made, a long-term assessment that this is a good loan for this person to take out.
Yeah. Well, I think some of that happened with trying to give everybody access to that type of credit, where the financial institution could sell the loan and then make more loans, more mortgage loans. But we do still keep some of our mortgages on the books ourselves. And then I know that if someone is having a problem, and even though we've sold the mortgage, but if they're having a problem and we need to get with the company that we sold the mortgage to, we will fight tooth and nail to get that information for them. We do take care of our members. So even though we may not still house the mortgage with us or hold the mortgage with us, we will go to every extreme to get the information that we need and the documentation that we need from wherever we sold it to. Because that's our job, is to take care of our members. And I think that's maybe something with credit unions, that, they're the owners of the institution. So you are going to go a little bit further and do what you need to do to make sure they're satisfied and you're doing everything you can for them. Mm-hmm.
And it's part of that complicated, notion that we have to deal with finance today. And, Lisa, as you deal with students, what are some of, you mentioned that they have sort of a lot of questions about things that they've heard a little bit about but don't really know. What are some of the key emerging questions that students are having about finance and investment and banking?
I think for them, again, it ties to what they're hearing at home. So they want to know about mortgages.
Okay.
They want to know about mortgages. I think in this area, a lot of students are kind of like the parents are relying on the students to be a little bit more knowledgeable of them than they are, and being able to understand, especially if English is not their first language. And so you find that they want to understand and be able to read and go through these mortgages. And I've had some students come to me and say, you know, can you help, you know, my mom or my dad or my aunt or my uncle? So mortgages is a big thing. I think credit cards, basic business stuff. My class, you know, it's a marketing class, so we teach personal finance, but we also kind of just go over basic business conduct and those types of things. So they just have questions about everything. Credit cards, banks, credit unions, what's the difference? We do a great job of explaining that with our partnership that we run in the schools. But I think it's just a laundry list. It's just a little bit of everything that they want to know.
And so I'm curious as to your thoughts. You know, you've all mentioned in some way, shape, or form that having parents and students work on these issues together is really important if we're going to raise a new generation of Arlingtonians and Americans who are more financially literate than perhaps you know, the generations that are worrying about this now. What can we do? What are some of the things that maybe you've tried or you think should be tried in order to bridge generations?
Well, I think everybody ought to have more dialogue about decision making, because I think really managing your money is making wise decisions. And if children are coming along and they're asking for things and they want things and there's not sort of a dialogue, do you need this? Is this a need? You know, do you need it right now? Why don't we think about this? Well, what are you giving up if you get this? Allowing kids to make money mistakes. You know, there's nothing more powerful than giving a child some money, an allowance or whatever, and letting them blow it all, you know, on something like candy. And then they want to go to the movie at the end of the week, but they've blown all of their entertainment money. And so they're having a little bit of pain. We try to protect our kids from everything because we don't want them to have a rough time or to have hardships. And so we try to protect them. But we end up sheltering them from making decisions and kind of going through those decisions with them, where we kind of talk about the different aspects of it. And every family's different. Every family's values are different about what they prioritize and what they want to spend their money on. So I think a lot of it now is just talking about it and not trying to protect kids from the money, not bringing every single bill you have out to the kitchen table. But, you know, Renee was talking about the cable, you know.
Right.
Maybe we only watch 2 movies a month, but we're paying for this movie package. Do we really need that? The landline, nobody probably needs that anymore. So that's something that can probably go away.
Right.
And then every child now has to have, you know, their own cell phone, and it has to be text, unlimited text and all this. So I think they need to see some of the things that they're using and what the cost is on those, because I don't think they realize. I think they just think that money grows on trees and comes out of ATM machines, and, you know, they don't really realize the whole impact of it. Like, oh my goodness, we're spending, you know, $150 every month just on phones for people to have. And we're spending $100 a month, and we only watch 2 movies, but we have this enhanced package for movies. And so is that really a good use of our money, and is that something that we should really be doing?
I think also, in your original question, we were talking about how can we bridge the gap. I think what I'm seeing more of is partnerships with, you know, students. They hear about it at home, obviously. But when there's a business that is willing to come in and talk, and speaking from a teacher standpoint, so, you know, students see me every day, they hear what I have to say, but when we have the opportunity to bring in professionals from the business industry to come in and talk to the students and partner with us, and get that feedback from the professional, I think it makes a big difference. With my students, we have a great partnership with the Arlington Community Federal Credit Union, and so Patty, as well as some of the other professionals, will come in and talk to the students, and a lot of times the students feel more at ease to talk to them, and so now they would feel more at ease going into the credit union to conduct transactions or to open an account, because they see it's not this scary thing. It's not this big scary business where, you know, only their parents can talk, and so they feel, you know, comfortable doing it.
I think one of the things that, like I was saying earlier, is you do need to get the whole family involved. And I've realized this, and that's one of the reasons why I started Money Concepts for Life, the educational program. But I've also tried to get it into the schools, and not so much as the students, but also in the PTAs, or to do events, mother-daughter, father-son events, like a program that I have just on auto insurance. It goes through the basics of the auto insurance and why it's so important to have auto insurance, and how it can actually, if you don't have the right types and the right amounts, could be financially ruining your life if you don't have the right, and you're a horrible accident. But on the other side, it actually even discusses information for teenagers and what they need to do, and to make sure that they continue to get good grades so that their insurance will not be quite as high.
Right.
And there's things that you can do. Even seniors can take classes to make sure that, you know, their auto insurance, they can lower the rate. But it goes through all these different things, and also the financial planning one, or the financial position, actually goes through the expenses and budgeting in detail, and also cash reserves, why it's so important to have that emergency money. So you can actually look at that, or download this information on the internet, and be able to look at that and share that with your kids or your family, so that everyone's involved, everyone's on the same page together, because you're not learning that in school, and there's not that open dialogue. And so many families aren't sitting down for that family dinner where you can discuss things anymore. But this is a good opportunity to go ahead and redo that and refocus on those things.
Well, you know, forgive me for a minute. We just got an email question, and if you're watching VoiceBox, you can email us at voicebox@arlingtonmedia.org. And we just got a question, which is exactly where I was going to go next with this. You know, the economy, the nation's economy, 70% of it is consumer spending, and so goes consumer spending, so goes economic growth. In fact, principal reason we had such a deep and long, prolonged recession was consumers' ability to spend, and their actual spending fell off a cliff. And if people watching tonight were to take all of your great advice, and people all across the country were to take your advice and budget more and save more, that would have the macroeconomic effect of fewer jobs at Starbucks and fewer jobs at Comcast or whatever your cable company. It would hurt the overall economy. How does someone sort of, you know, balance that reality that maybe what's good for the individual is really not so good for the community at large, at least in one respect?
Well, we're all going to continue to buy. We're all going to continue to need to have cars and homes, but there was a lot of excess consumption that was going on, I think, that people were just buying. I'll give you a perfect example. When the Cash for Clunkers program came out to stimulate the economy, I think a lot of people just felt like, well, if I have a clunker, you know, I need to get a new auto loan now. It might not be a prudent thing to do, that you're getting into a brand new loan, which means that maybe you had a car that was already paid off. It's not, just because you can do something doesn't mean it's necessarily a good idea to do it. But I do think that we will continue to spend, we will continue to use credit cards, but I think that what people are doing now is they're just kind of saying, you know what, I don't need to overspend. I don't need to spend where I shouldn't spend just because I can. Should I really do it? Is it a good they're questioning it more. Is it a good option for me? And we'll never stop spending. But I think that the rate that we were consuming things was, it was off the charts. And maybe it is the new normal now that we are saying, okay, this is maybe a more measured growth, very slowly. It will come back. People will continue to have needs. School closed, kids grow out of their shoes. You know, you're going to have to go out there and buy things.
Apple produces an iPad.
You got to have that new technology. Absolutely.
No, indeed. You know, I just, apropos of nothing other than it was just hilarious. I have a good buddy of mine who was so proud. He went through 6 months of not eating out at all as his vice, but he was first in line to get the top of the line $800 iPad when it came out, and he didn't quite understand my cynicism going, you kind of eroded a lot of good work that he did there.
Exactly. He had his priorities though, I guess.
Well, his point was, you know, the old me would have gotten the iPad in.
Right.
He still felt good about himself. So, you know, we've talked about sort of reinventing yourself or reimagining sort of how you approach life and money, and we've come up with a lot of good ways to do that. The question always sort of becomes, when you talk about Americans, cynics say that we have real short attention spans and we're on to, you know, we forget about pain very quickly and move on to the next. And do you really think that we are at a point where we've reached or we're beginning a new normal, or if the recovery becomes more robust than it is right now, will the sort of pain of the Great Recession and a lot of the things that we're talking about now just sort of fly out the window? I'm just looking for you all to prognosticate a little bit.
We probably will forget. I mean, you know, when times are good, you do forget. But I think the good news is that it's nationally known that the savings rate is up now. And some of the things that people have maybe put into play right now, they will continue to do, like more systematic savings and putting a little bit more in their 401k instead of spending more. So I think some of those habits that maybe they've gotten into in the last couple of years may continue on. And hopefully young people are hearing, you know, about the economy, and they're being more cautious in jumping into credit and those sorts of things, because they say, well, you know, I don't want to get stuck. I don't want to get in trouble. I don't want to not be able to make my payment. So I think maybe it's made them a little more cautious right now, which maybe is a good thing. Put the brakes on a little bit.
Yeah, I think with students that this has been a really good learning and eye-opening experience for them that they will remember, especially going into their college. You know, they'll think twice about, you know, jumping into a credit card.
Yeah, I guess for the ones for whom this is really their first exposure to the world of economics and finance, it's a pretty big lesson that they're learning.
Yep.
Indeed. You know, for all of the good planning and good education that a person may get, good advice that they may get, the research that they may perform, the due diligence that they may undertake, stuff happens. And, you know, if you look at bankruptcies in this country, most of them are not caused by, you know, bad loans or reckless behavior, but by a catastrophic health event for people who are uninsured or underinsured, or for whom they've got great insurance, but the catastrophic health event still consumes everything that they have, everything that they've saved. You know, how do you talk to people about the things that they should do, given that there is that awareness that things do happen that can sort of wipe away all of the good work?
And what you're talking about right there is most employers were giving benefits, and a benefit of having disability coverage. And it is a fact that it used to be that most foreclosures were done because of someone suffering a health issue and not being able to work. And when that happens, they usually would get 60% of their pay. Of course, that becomes taxable pay, which is just like getting 50% of your pay. Now, if you're living off 100% of your pay, and all of a sudden you're now getting 50% of it, then you can't afford everything. So one of the other things that people don't realize And what I said earlier about looking at your insurances, look and see what is efficient, and sometimes you have to have additional disability coverage, not just what you have at work, to protect yourself a little bit more in case you do become disabled, especially if you're a homeowner or you have credit card debt or you have family responsibilities or auto loans and all these different debts and expenses. You need to make sure that you have the right coverages. God forbid something happens to you like that.
Indeed.
Yeah.
So we've just got a couple of minutes left, and Lisa and Patty, I want to make sure you can have some last words. So just sort of, how do we deal with the unexpected, or really just use that as a jumping point for any sort of closing thoughts you think we need to end this discussion with?
I think having a safety net. I think that's a big point that I drive home, the 6 months of savings. So try to have something for that rainy day. The unexpected will happen.
So 6 months of savings is the sort of textbook answer that you're giving students these days?
Yes.
Okay, 6
That's
months. Do they just say okay, or do they go, really?
They say wow.
That's a lot.
That's a lot.
Yeah, that is a lot.
And then, of course, life does happen to people. But, hopefully you have, support with a credit union, a financial institution. If you let them know about the problems that you're going through, they're going to work with you. Believe me, we don't want your car. We don't want your house. We want to help you get through those bad times as well as the good times. And if there's something that, your loan can be modified in some way, we will do all that we can to help people in the bad times as well as the good times.
Well, this has been just a great conversation, and I'm glad that we found a way to talk thoroughly about money, even though it's something that many families and many people find very difficult to do so. We've had a discussion on VoiceBox that really should happen in every household in Arlington, and hopefully this will maybe encourage people to do so. Maybe you're not in a position to have 6 months of savings in the event that life happens, but we've heard a lot tonight about things that we can do easily tomorrow with low cost and low pain. Budgeting, knowing exactly what you're spending your money on, questioning whether or not the expenses that you're making are really necessary expenses or ones that you could do without with minimal sacrifice, involving everybody in the family in the decision-making process and the understanding process about money, so it's not something that just the parent or just the child has to burden alone, but really can become part of the collective. And by all means, do your due diligence and do your research. It is amazing that we will question the motives and quiz people who are delivering our newspapers, but at the same time, we just let someone take our money and do with it whatever they may decide is best. So hopefully you've watched tonight, you've gotten some practical tips about how you can be a better, effective steward of your financial future. Hopefully this will be a chance for you to reinvent yourself given the new normal of our economy and to make your tomorrow much better than today. Thank you all for joining us on VoiceBox. I'm Christian Dorsey, and good night.